is uh is actually up a little bit today. So as I wake up every morning and complain that Apple is lagging behind, today we're green. Of course, my other friend, Progressive, still lagging behind. So I've got
You got to
I've
be
got that.
patient on that one.
I
That's
know.
a two month outlook there. Got to be patient.
Yep, yep, yep.
I
Well,
have traded.
I was
I've
thinking 2 year
traded.
outlook.
What's that?
I said I was kind of thinking 2 year outlook, to be honest.
Two
But
year. Well, for me, it's a forever hold stock. But on this trade, I've done this on Progressive AJG a few times, and it can take a couple weeks to develop and turn around. But when it starts going, it'll do 10% in a week. So
yeah, yep. Hey, Roger. Good morning.
Good morning, gentlemen. How are you?
Doing great. How are you?
Good. Doing great. Great. Glad to be here. Thank you for having me.
well, thanks for
Absolutely.
hopping on.
We love having someone with a different perspective come on some of our sessions and train in some areas that we don't hit. So I think you guys are in for a treat. Roger's obviously been really dialed into the day trading stuff, and has had some unbelievable success on that. But just even I think more fundamentally for today, has some lessons and some concepts that you just don't learn in the regular market. So if you're just kind of follow the talking heads, or in fact, even if you just follow Graham and I, you'll hear lots of good information about how to think about stocks and strategies. But when you get into that day trading world, that active trading world, it's a whole different slate of things to consider. And so looking forward to Roger breaking a lot of that down. Before we get into that, I was going to give away a couple stocks that I think should be on your radar. If you'll allow me to give away a couple stocks, I'll just pump them in the chat. We don't need to do a whole big screen share here, but here's a couple that I think are interesting right now. One is ASTS. I'll type that in for you guys. ASTS. ASTS is breaking out, having a great trend, also seasonally quite strong right now. And on top of that, has some institutional order flow hitting it as well. So I like ASTS, or at least, keeping it on the radar. We also have CCJ, which, as you probably know, is one of my favorite stocks, one that I've been holding for quite a while and plan to hold for quite a while longer. One of my top holdings. So CCJ, another, one ripping higher. Could maybe argue it's a bit overextended, so maybe just keep an eye on it. Technically speaking, but seasonally strong, hitting all of our trend marks there, and also has some institutional order flow. And then let me give you. There's one more I had on my kind of short list here that was a little more speculative. Dash was the last one there. DASH. Same kind of thing. Not as strong seasonally, but been a really strong stock here. I'm liking some of these stocks that have really overperformed. So the ones I've given you might fall into that category where they're maybe a little top heavy right now. They've ripped, but I like the ones that are kind of the pack leaders right now, especially if you're going to do the kind of trading that I do, which is more of that kind of defensive income style that we do with the income machine, where you're not necessarily looking for it to go 2% higher. You're not necessarily looking to time that next 2%, 3% move. What you're really looking for is something that's just going to be stable and steady and not turn around and bite your butt the other direction. And so for me, the easiest way to get those kind of trades is really to dig into strength. So ASTS, that's the strongest one, meets all the criteria, and is 80% score on seasonality, which I'll explain sometime next week. And then CCJ and DASH, that's DoorDash for you there. And no specific trades. I'm not saying they're buy nows. Like I said, you could probably make the argument they're a bit overextended, but ones that I like for the radar. And if you're using the income machine, maybe pop those into the search bar and see what kind of income opportunities you get on them.
Awesome.
Roger, yeah, the great point Mac has here. Your hair isn't blowing in the wind like that palm tree. What's going on?
Well, it's not that long. I just got a haircut a couple of days ago, but very true. Let me put my fan. I do have a fan here for this for that effect, but it is a green screen.
It's because he's sitting in a
I don't hide
cabana.
it. It's
He's sitting in the
obviously a
cabana.
green screen. It would be kind of awful right now. There's a nasty heat wave East Coast all across. Not a great time right now for being outdoors, actually.
Yeah, but
Yeah.
it's a nice heat wave that's kind of happening in the stock market too. So we'll take that.
Yes,
True.
absolutely, absolutely.
True. Yeah,
All
someone
right.
just mentioned coin, by the way. Yeah, let's not talk about coin. I'm too depressed to talk about coin. What I get out at like $200. Yeah, $200. It's at 369 right now. Let's not talk about coin.
Yeah, that sounds like me and Carvana.
All right. Are you guys? Can I go ahead and share my screen?
Yeah, walk us through everything.
All right. So real quick. Well, actually, it's not going to be real quick. Um, a lot. So today I want to talk about how to structure and how to look at market internals and how to look at and how to set up day trades. And a lot of folks believe that, hey, Cyrus, good to see you here. I see you everywhere. Look at you. Fancy seeing you here. And anyways, a lot of folks believe that we're staring at intraday charts, but the truth of the matter is, the way we set up our day trades, we start at the big picture view. We start at the 10,000 feet view. We start at the daily chart. So this morning, I'm just going to walk you through some ideas, and I think you guys will like where I'm going here and show you some internals and show you why there were so many red flags that said that the market was not going to go straight up. Now, if you were in my session an hour ago, I said that I believe the market's going to make a high within the first hour of the day, and then it's just going to pretty much drift. So far, my theory is holding true. Let's see. We had about 600 people there. Scuba Chris says, yeah, I did say that. I did. Now, let's say if my theory's holding true, but there's a few things I want you to see so you understand how I came with that conclusion, and then take you a little further through that. So the first thing, as you'll see here, we have a lot of deviation. We have more than one ATR deviation from the SPY to the 8-day EMA. That's getting a little dangerously overbought. We also had a gap and go yesterday. Gap and goes are very rare, okay, and it's very rare for a gap and go to have straight up follow through. Usually, a gap and go will have a consolidation for a few days afterwards or a pullback. In this case, we're starting to need a little pullback to the 8-day EMA. We're getting a little bit ahead of ourselves. So the first thing we noted was. And look, we're not looking. The 5-minute chart is the 5-minute chart is right here, and it's doing crap. I mean, it's doing absolutely nothing. So the first thing we noticed is that the market is not really doing much. The second thing we noticed, and I'm just giving you clues to how to approach the market. The next thing you've noticed is the bond market. What did the bond market do overnight? The bond market opened at the high last night and drifted down all the way. Okay, that's sign 2. Okay, great. What did Europe do overnight? Europe didn't do much overnight either. Europe closed down negative 6.16. So Europe didn't go up. We're recovering from a gap and go. The bond market's down. All right. So there's really no major, and there's no major catalyst, and we have Fed. There you go. Let's repost that for every. Oh, you guys don't. Do you guys share posts for everyone, or you guys don't do that? I open my chat for everyone. But anyways, I'll
We
just.
did in
repost.
the other platform. I'm not sure how to do that here.
It doesn't matter. I'll just repost. Anyway, thank you. I appreciate it. So how do we know it was going to happen? How do we know it was going to happen? So again, we don't know anything. We can't predict the future, but we're starting off with the big term perspective. Okay. So we have a few things coming into today, and I spent an hour talking about that every day, and I did today. And I told you exactly why. I told you exactly what I was looking at. We were looking at volatility. We were looking at the bond market. We were looking at global markets. We were looking at overnight action, and we were looking at to see what was the most likely outcome for today. Okay, then. Okay. So what happened after the market opened? Now remember, we haven't talked about trades yet. I want you to see how, hey, Adam, Eagle Beagle, good to see you here. I want you to see how we peeled this onion. And that's the key. I want you guys to kind of get inside my thought process, okay? And if you guys want to interrupt and ask questions or whatnot, please do. I mean, that this is it's a learning exercise. So you could see we're deviated from the 8-day EMA. So the first thing I did when the market opened was I looked at this, right? And I showed you guys on the main, I try to remember and post this for you every day in the main Telegram channel. And the first thing I said was there's nothing moving here. There's nothing really moving here. There's nothing up or down over percent. And as a matter of fact, here's an image of it right here. Bunch of random trading action. And I think I posted it here as well. But my point is, I want to look at the graph. There was a picture of it. Anyway, you see, it wasn't any different than it is right now. This is how the break, this is what it looked like, okay? So right away, as soon as the market opened, did we see like strong sector strength, anything like that? No. Oh, there was one more thing that I missed. Sorry, I'm going to go back. I have to go back here. So notice we're not even talking about any indicators. We're not talking about 5-minute. We're not talking about any of that stuff. We're kind of just looking to see what's going on with the big picture. Another major thing was this: when we were looking at sectors over the last 5 days, when we were looking at sectors, we started noticing that the Dow started creeping higher, and communication and consumer discretionary were a little further down. So we had some fragmentation compared to yesterday, when yesterday it was like, I mean, it was beautiful. Look at this, all speculative. I mean, every one of them, like textbook, home builders, it was very, very nice yesterday coming into today. So actually, here's what it looked like. This is what yesterday looked like. It was just perfect. Home builders, retail, semiconductors, financial. It was communication, consumer discretionary, and the Dow was down here. And right now, you could see that the Dow Jones is starting to come up a little bit, and we're starting to creep up other things in here. So the point is, we knew this morning that things were not as pretty as they were. Now, after the market opened, now I'm going back to after the market opened. The market's open. I'm looking at this. There's not much going on. So right now, I'm not seeing any institutional. Nothing's up or down over 1%. Okay, great. Now, I start looking at this. And this starts opening up an ocean of information for me that most people are not even looking at. Am I sharing my screen, guys?
Yep.
Okay, cool. Thanks. Somebody said I can't see charts. So then I started looking at my market internals. Now, where did the market, where did the ADD open? It opened at -100, and it went straight down. Okay, ADD is how many stocks are opening above or below yesterday's high. Right away, so I come in with a theory that we're not really that strong today. We don't have any sector up over 1%, and ADD is opening up negative, which means stocks are opening below yesterday's close, not above. Now, just so you guys know, for a run day, a stock has to be above yesterday's high or below yesterday's low. This is telling me that stocks are opening up relatively flat or negative and right away going down in terms of where they are in comparison to yesterday's close. So right away, look at where we were yesterday all day, positive 1,400. This is where we opened, positive 1,200. This is where we opened today. So now let's review real quickly as we take our. You're still holding that short, Matt? Are you still holding short? We're short. This is our second trade. We're holding second short already today. All right. So let's. Profit Trader says I don't see the screen that Roger sees. You guys can't see my market internals.
Can you guys, looks good from our side. You guys might have to click like the screen view there.
You guys see the ADD, the tick, the VOLD, all that, right? Okay. I'm sorry, I don't have YouTube on, so I just want to make sure everybody could see everything I'm doing. Okay. So let's continue. Okay. Good. So I'm just monitoring the chat to make sure everybody can understand and see what I'm looking at. So notice right now we're going down. Let me ask you a question. Since the market opened, has advanced decline line gone up at all? No. When the market was flirting and making new highs right here on the Nasdaq, this is the S&P right here. What were we doing? So the market's making all-time high 10 minutes into the opening. I want to show you how important this is, okay? And meanwhile, no sectors up over 1%. Sectors are looking like this. They're all negative, right? Advanced decline line is negative, right? VOLD is going straight down. I'll explain what all this is. There's nothing showing that we're moving higher. Nothing internally, nothing. Now I'll explain all this to you guys in a minute. We'll talk about this in a minute. The point I'm making is this. I've already talked about 7 or 8 things, and not one of them was bullish. And they were all factual. They're not my opinions. So let me go back. The daily chart was deviated too far from the 8-day EMA. Number 1. We had a gap and go yesterday. Number 2. Okay. Europe closed down overnight. Bonds closed down overnight. So that's 1, 2, 3, 4 things. Oh, and we have Fed data at 10 o'clock and 10:15, which is coming up right now. So none of this is bullish, right? None of this is bullish. Fed data has not been bullish lately. There you go, Carlos. Good for you. Glad to hear that. Please repost that if you don't mind. So point being is, several things before the market opened told us that we're probably going to make a high in the first half hour. Each and every one of these things I've mentioned to you guys during my morning call. None of this is a surprise. Half of you or more were on my morning call, and I bet you're all going, that's exactly what he said. Then, after the market opened, as the market was making an all-time swing high and the NASDAQ was making an all-time high, what was the ADD, advanced decline line, doing? And again, this is telling us how many stocks are positioned higher or lower. Now, do you know too many stocks that open higher above the previous day's high or close and continue just fall down? No, they usually position themselves. If they have enough momentum to open above yesterday's high, they'll usually continue moving. We opened negative and continued going down. So this is really, really important. And I use this for day trading. Now notice we've been talking for about 10 minutes. We haven't talked about entry, exit, profit target. We're talking about you guys looking at things from a big perspective, broad perspective. So this is telling us right now that momentum is actually more stocks are turning negative. We actually have a lot of stocks below yesterday's low, which means there's a lot of profit taking. It's closed, Dennis, closed, not high, closed. Sorry, I misspoke, closed. So this is negative momentum. There's a lot of pressure right now. So right now you're trying to surf and you're surfing against the tide. Okay. Now, but it's just one indicator, right? I mean, you could say, well, Roger, you don't know what you're talking about. What if 5 mega cap stocks are up? So you got to look at the mags with this. But fortunately for us, or unfortunately for us, however you want to look at it, what did mega caps do 5 minutes after they opened, or 15 minutes after they opened? They fell apart. And again, when did we see this coming? Before it happened. Before it happened. Now, so then we want some confirmation, because this is just one thing, right? And again, we're still looking at our sectors, and we could still see that none of them are up over 1%. As a matter of fact, most of them are down. The only thing that's holding up is tech. If tech breaks down, that's goodbye, Charlie. So now we look at VOLD. What is VOLD? Now, VOLD, for anybody who's been following me for a while, you guys know we never want to fade the VOLD. The last thing you want to do is fade the VOLD. Since the market opened, which way has the VOLD been going? Which way has volume been moving into? The upside or downside? Straight down. Straight down. Straight down. Right, Jim? Right, Cyrus? Straight down. Straight down. Straight down. Now, typically when the S&P deviates from the VOLD, who wins? And anybody who's been following me for any length of time will tell you right now, the VOLD wins 9.5 out of 10 times. Which way is the VOLD going? Not that the S&P is going very far away from it, but the VOLD wins. That's right, Mark. The VOLD always wins. Okay. All right. So look at the picture that these two things are giving us. We have the steering wheel. The steering wheel is being moved. Volume is definitely coming into the low side. Okay. All right. What about momentum? What about momentum? What about the gas pedal? Is anybody messing with the gas pedal? Not really. Do we see any aggressive buying, which means this would be over 700? Have we seen over 700, 750 today at all? That's right, Adam. Never bucked the trend of the VOLD, ever. Got a lot of people here from my class, from my VIP room here. All right. Notice at no time today did we even go above 400. Okay. So let's see if we're bullish again. Roger, the market's making a new, NASDAQ is making an all-time high. And while it's happening, more stocks are declining precipitously. Yes, I said precipitously. The VOLD is coming straight down. We have no upticking. Don't you guys think this is very, very useful to have? So we have a pretty good lay of the land, right? A pretty good lay of the land. Jay Singer said, good morning, Roger. Out of the second short, up $3,500 this morning. Is Matt out yet? No, Matt is not out yet. He's still in. He's a stubborn beast. All right, but I'm glad you made out like a bandit. All right, so do we have any reasons to look at the long side? Remember all the things I've been talking about for the last 10 minutes. Do we have any reason to look at the long side right now? No. Okay. So now let's look at the Alpha Zone Pro. All right. So what is Alpha Zone Pro? What side are we going to be looking at? Are we going to be looking at this side, or are we going to be looking at this side? Remember, it's very easy to determine what side you're going to be looking at. So let's take a look. Ah, there you go, Glenn. Is ADD above or below 1500? No. Is tick above or below 750? Not a chance. There's absolutely no reason to look at the right side. So we only look at the left side. There you go, Peter. Look at this. We got my entire VIP room here. What's going on? You guys are cheating on me. I love it. All right. So, by the way, I just wanted to also, I forgot to mention this, but Matt, from the moment we opened, equal weighted SPY never went higher. And that's something I always tell you guys to look at, the equal weighted SPY. Look, no uptick at all. This is the opening right here. So, but for the mega caps, we would have never made a swing high on the NASDAQ. So, and by the way, I'm not bearish. My whole feeling is that I think we're just going to, just to let you know, on a daily, I think we're going to come down to the 8-day, which is, where's my other chart? I got too many charts here. That's the problem. Where's my, hold on. Let me just find my, there we go. I think all I'm saying is I think we got a little bit ahead of ourselves. I'm not necessarily saying we're going to crash, fall apart, or anything like that. I simply think that the market's going to hit the 8-day EMA or come near this area, maybe fill this gap, and come into this zone right now, come back into this zone before going back higher. Okay? So now that we have a game plan, now that we have a layout, now that we have a template in our head, we have some idea of what we're talking about. Are we going to be looking at trades to the long side? Are we going to be looking at momentum trades? Are we going to be looking at up and down trades? Well, based on everything that we've done today and everything we've seen today, we're going to be looking at up and down trades. That means we're going to be looking at the left side of the wall. We have no reason to look here. Yesterday, we were trending. Look, see that arrow? That's a nice move, right? We went long, I think 3 or 4 times yesterday, and we made money every time. But today's not that day. It's a different market environment. So, folks, I just want you to understand something. You know, a lot of people will talk about their favorite stock. They'll talk about but very few people talk about the things that really move things. See, most of your stocks have a correlation to the market of 70%. So if you don't know where the market's going, you're not going to know where your favorite stock's going. So it's really important to do what I'm talking about because it helps you gauge price action more effectively by looking at where you're coming from to determine where you're going. So all of this time we've spent talking about the background. What's the example I always give you guys in the VIP room? Before you ask a girl to marry you, find out if she speaks English. Find out if she's a citizen. find out if she's really a girl. That's what we've been doing so far. Now you're ready to get into a conversation with her. Okay, so now let's talk about this. So now we're talking about the market and all of this stuff. So what this is this is called Alpha Zone Pro. A lot of you, hey Kevin, good to see you here. Good to see all of my guys here. So what we're looking at, and if you've learned this before, this will be a great review for you. Okay, and if you haven't, pay attention. This is good stuff. So the first thing we want to look at. Now, I want to explain to you how these levels come to be. Okay. These are not your regular levels based on any moving averages or any stochastics or any RSI or anything like that at all. What these are, they're based on actual market movement. So these two right here, the yellow and they're labeled. You could see right here, likely move. And today it looks like we're going to be just kind of drifting around the likely move, maybe going a little bit lower. And again, I think we're headed towards the 8-day EMA, and that does not take into account if Trump comes out and says something about tariffs or whatnot. Okay, so we're just between these lines right now. We're not really seeing any momentum. We're not really seeing any directional bias. We're not seeing any flow. We're not seeing any rhythm to the market. Okay, these levels are based on volume, price to average volume. These levels here are based on option volatility, okay? So you have different assets giving us levels that are not based on price, just price. This takes price into account. These do not even take price into account. But this also takes volume into account, okay? So but here's the problem. If you don't pay attention to all of the things that we've been talking about, hey, Richard, funny seeing you here. If we don't see the levels, the difference between the levels, the highs and lows, and the rhythm, we're not going to be able to gauge what side we should be on. We're not going to be able to see if we should be taking trades favoring the long side or short side. You're not going to know any of these things, and those things are really important. You can't just come into the day and do this. You can't do that. You're not going to get a lot, okay, out of it. But by doing it the way I'm teaching you, by taking it like a layer by layer and layer, what's the big picture? What's the structure of the market? Are we in a trending mode? Are we in a choppy mode? Do we have a lot of volume coming into the market? Do we have a lot of volume leaving the market? Is there any particular sector we should focus on? What's the catalyst for the day? All the stuff that I teach you to do in the morning and the afternoon show, day in and day out, okay? Then, once you have all that, once you have the rhythm of the market, you can then come here and you could start finally figuring out, hey, where should I get in? It's very important to figure out where you should get in after you already have your positioning, and that's what these lines are for. And we had a short right here, and it's still active. Now, so the biggest factor here, the biggest problem that people don't do is they rely on these arrows, but they don't rely on the levels. Folks, the levels are a lot more important than the arrows. The arrows are simply 20 bar high and low, and the bar looking a very specific way. Well, you get a little edge there. You get more of an edge there than you'll get with a lot of other people. But that's not where the money is. The money is having the lines line up with these levels like you see right here. See right here? That's where the money is. The lines lining up with the levels, okay? The orange line, where is the orange line? I don't know. They all kind of look a little bit orange. Hold on a second. This is the VWAP. I always like to have the VWAP, okay? I always like to have the VWAP here. So yeah, that's the VWAP, and I use the VWAP a lot for profit targets. Okay, in this context. Okay, in this context. Okay, so levels and arrows have to be next to each other. Like this is a great example. This is not a good example. Taking a short and this arrow, just because you have an arrow, wouldn't be sufficient. but taking it up here would be okay. All right. All right. What did Matt just do right now? Took profit. A little profit, baby profit. Yeah, you took profit. All right, that's good enough. So we took our second profit on the day. Now let me explain to you what this is and how all this comes into play. Okay? All right. So let's say you have a short arrow right here that's been signaled. Okay? Let's just hypothetically say, Tinya, how are you, Sassy Trainer? Tinya, aka Sassy Trainer. So let's just say you took a short right here. Okay? Say you took a short right here. Well, you see that now this right here and this right here, they're exactly the same thing. This and this are just two ways of visualizing the same thing. Okay. Now, why did I do that? Well, I'll tell you why I did that. A lot of people are colorblind. I'm not kidding. A lot of people are colorblind, and a lot of people just love oscillators. You guys are used to using the RSI, the stochastics, and all those other terrible oscillators. So that's what that is, okay? I took out, now, why is this oscillator, and how is this oscillator different from, say, RSI, okay? This oscillator does not have divergence. So I'm going to tell you two things. First off, divergence doesn't work. Divergence does not work. Tinya says, fantastic, made money on the last 2 trades in the trading zone. I like that. I like that. That's good. I like that. Let me actually repost that for Dave. Likes that too. Go. There we go. Thank you for doing that. Kevin, look at you. Nice, nice, nice. Very nice. Very, very nice. Let me just post this, and there we go. Thank you, Graham. I appreciate that. I'm posting it in my
No
for Dave. Yeah.
Yep, I'm here. So, I'm in the background.
I appreciate it. Thank you so much. I will, Fernando. I will. So so let me show you something. Now, again, you could use this or you could use this. Okay. This does not work. This does not work the same way as most oscillators. The way most oscillators work is this: price makes a move, and then the oscillator makes a move, and you're like, wait a minute, the move is already halfway over. I don't remember if you guys remember this, but the last time the market had a hiccup around I think it was February, March, around that time when Trump threatened to fire Powell the first time, and it only lasted a few days. But the point I'm making is this: the market really got scared, and the RSI, by the time the RSI told us it was time to take action, the market already dropped like 400 points. And we don't want that. We don't want that. So what this does is this really tells you when something is overbought or oversold while it's happening. So what I like to do is I like to see an arrow, and then I like to see things turn a few bars afterwards. So in this case, you could see right here, the bar, we got our arrow, we got our profit target right here, and we would have hit it pretty quickly. But let's say you wanted to stay with the trade, okay? I will talk about 0DT in just a few seconds, Zoom user. Hey, Moondog, good to see you. So you could see right here how everything is turning negative, right? So if everything is turning negative, or if you don't like this, if this is moving lower, you could stay in the trade. You don't have to get out of the trade. You don't have to be swayed. So right now, you see how the yellow, and it hasn't even turned red yet. As long as this is staying the same color, you can go ahead and you can stay in the trade. Now, let's say that, hypothetically speaking, I don't know what's going to happen in the next, I can't predict the future, but let's say we start getting this, the baby blue lines coming up, or a trend moving higher and it's positive. This would automatically we would get the cowbells. The cowbells would start ringing, and we know momentum is shifting to the upside. So again, I don't care if you use this, and I don't care if you use this. What I care about is the fact that you understand that you could stay in a trade if momentum continues to move your way. Now you see here we're getting a little. There's the cowbells. You heard the cowbells? The cowbells just came. That means we're getting a shift in momentum. That means momentum could be shifting higher. So if I was in a short trade, I would consider getting out, because the cowbells rang. That means we have a shift in momentum. And I programmed special cowbells, tring, 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 to give you that sound when there's a shift in. Richard says, I love the cowbells. They tell me, Richard, pay attention. I love that. So yeah, we just had cowbells. Yeah, it doesn't mean you have to take action, but you should pay attention, and you should be looking to see if we get continuation of yellow here, and if this decides to straighten out, or if this turns a different color. But let me no, you don't want to take any longs here at all. We're only deciding whether you should be getting out of your shorts. So you guys understand how we've been peeling this nut. We've been peeling this nut completely this entire time, and it helps us. Now, you understand something else. Something else you need to understand. All right. These things, this thing here, and I'm gonna, please, in case I haven't made it clear enough, this oscillator is a confirmation tool. You don't need to be relying on this as your entry and exit. You use this as your confirmation and whether you want to remain in the trade or not. Okay, so you use this as a confirmation. I created this tool, all of this to work in synergy together, just like I explained how I look at the market. I don't just look at one thing. I look at 10, 15 different things, and I get a consensus of that. And I'm very transparent. I tell you all about it at noon, and I tell you about it at 8 o'clock. But my point is, if you're just looking at a pattern or a setup or a stock, you're missing out 80% of the fun. And again, if you really want to become a professional trader, you got to start looking at things together. Like here, let me show you something. Look at all of the things we've taken in congruency here. Okay, we've got key levels, right? The levels. Number one. Number two, the asset has to make a 20-bar high, which is a turtle soup. I know a lot of you don't know what a turtle soup is, but basically fading the 20-bar highs gives you a very high win rate when you're fading 20 level at 5-minute highs and lows. Using 5-minute charts, when you're fading 20-bar highs and lows, it increases your win rate. So we got our levels, number one. We got assets making 20-bar highs and 20-bar lows, okay? You got the arrows when you have a reversal bar. Folks, that's 3 confirmation factors right there. Okay? That's 3 confirmation factors right there. Now, after that, you've got momentum. You've got momentum without any divergence. So you have 4 things to help you get into the trade, assuming you've already checked your daily chart. All right, very, very, very important. Here, Bugs, they don't have a choice for the. Here, let me repost that. Thank you. So again, very, very important. Oh, look. Now, so look, we were talking about this, right? We were saying whether you should stay in the trade or not. A second ago, this turned red. We had a red bar here. I don't know if you guys saw it or not, but I want to show you. Look at this. Is this turning yet? Not yet. It's still going down. Has this turned up yet? I can't wait to see what the next color will be. But let's see if this tells us if we should be getting out of the shorts or not. Because so far, what has momentum been telling us? We haven't reversed. We haven't, there's our red line. And look, the red line, it just turned yellow. But you see, it's lower. It's not higher, it's lower. Oh, it turned red again. By the way, the entire time we've been talking, we've been trading below the VWAP. The entire time. We can't get above the VWAP. So, market can't get above the VWAP. Let's look at our sectors again, like we did earlier today. Is anything changing? Nope. As a matter of fact, we now have a sector that's now below random at 1. Something is actually pushing the market lower now. So everything that I mentioned to you guys when we first came here is working out. I gave you a reason. I gave you a really, really good reason. Now we have 2 red bars. So there's no reason to go long, and there's no reason to cut your short right now. If you're following the Alpha Zone Pro, this is still red. and it's lower and it's moving lower. See how they work, how if this isn't helping you, you could use this, or if this isn't helping you, you could use it. But the point is, we're now usually when we get down here, we stay here for quite some time. So we could have a nice little shakeout potentially right now. Now, while we're doing this, let's look at something else, something that we haven't looked at yet, something that is also very important. Volume on the SPY is at 13 million contracts. Let me see what it is on the QQQ. QQQ volume is 30% of the daily volume. It's not that high. It's average. Volume is low right now on the NASDAQ. It's medium on the point is we're not seeing a lot of volume. So we're not seeing a lot of volume. Now it looks like it's hooking. Now it looks like it's starting to hook. See how it looks like we bottomed out right here? Unless this bar is lower or meets this bar, it looks like we can be starting to come back up. But the point is, you could use these tools together to give you a real good sense of what this is doing. Richard, how often are you using the Alpha Zone Pro? Tell us. I'll repost what you just said. Every day. There you go. There's Richard testimonial. Every day. So, by keeping an eye on the big term move, by keeping an eye on the structure of the market, by keeping an eye on all of these things, you'll have a really good idea of how to trade them. Now, how do you take advantage of all of this, right? That's the next question. There are several ways of taking advantage of it. All right, several ways to take advantage of it. The first way to take advantage of it, is to Richard says, I'm staring at it right now as we speak. Exactly. I figured that. Yeah. Jim says, I also use AZP every day, all day long. That's it. That's what I'm talking about. All right. So, how do you take advantage of it? Well, there's several ways to take advantage of it. You could just buy the SPY ETF. You could buy the leverage SPY ETF. You could buy the options on the SPY. The usual modus operandi is, look at that, we've been below VWAP the majority of the day today. Now, for anybody who's in my morning show, is today panning out exactly like I said it would? High within the first half hour and a random drift the remainder of the day. There's at least 200 people here. I know for a fact there's at least 200 people here, 150, 200 people here. Richard says yes. Peter says yes. David says yes. Jim says yes. Come on, I know you're all here. No reason to hide. Mary, all right, there you go. Just like I said it. Exactly like I said it. Not because I'm so smart, not because I can predict the future, because I can read the tea leaves. All right, see, Moondog, Camellia, iPad, Sia, they all, Bob, everyone. All right, let's not be all shy. So, what kind of options would we be trading? Well, I like 1 DTE. Matt likes 0 DTE in the morning and 1 DTE at lunch. I like 1 DTE all the way around. 1 DTE option, where's the SPY? 607.85. You could do the 607 or the 608. I want to show you and tell you something interesting right now. They're usually they're in the low $2 range. And 1 DTE is in the mid $1 range. Usually. All right, momentum just shifted to the upside officially. All right. So point being is you could buy the 1 DTE and you can buy the 2 DTE. It'll cost you a couple $100. Very, very simple. Very, very, very simple. Cost you a couple $100. That's all it will cost you. That's all it will cost you. A couple $100. Okay? Now, let's say you want to be a little more adventurous than that. Okay, I got you. Where's my Thinkorswim? Here's how you could do that. That's the MES. Okay? That's the MES. Right here. That's the futures contract. Okay? You got the same lines, you got the same levels. So you see how it's got an extra 0, 6141, 6151. Every point is $5. Every point is $5. Now, let's say you have a little bigger account. /ES. Oops. /ES. Oh, God. Can't type today. There it is. They look identical. Same thing. Same thing. $50 a point. So if we go from 61.43 to 61.53, that would be $500. If you're trading the MES, that's the micro, it's $5 a point. So if we go from 61.48 to 58, that's $50. And the other one, that's $500. Now, margin for this, if you go to a futures broker, is $40 per day. $40 per contract. Margin for the other one is $400 a contract. If you're with a stockbroker, it'll be more expensive. But, and this is a big but, you don't have any day trading restrictions. What does that mean? That means you don't have any day trading restrictions. You could trade with $500. You could trade the micro E-mini all day long. You can go in and out as many times as you want. What? Yes, yes. Same thing with the stockbroker, but stockbrokers, you'll pay more commission and your margin will be not $40, not $400, but $2,500 because they're playing middleman. Okay? So you could do it. If you have a stock account, you could do E-minis with your stock account. This is think or swim. And we have this also for TradingView. But my point being is that you can do this. You could do this with no overnight, no margin requirements, not having to get creative with your stockbroker. Okay, because you don't have to open up. You could open 3 stock accounts, cash accounts, and just do that and do the options, or you could just do the futures. The way I recommend it for folks is take your stock account. You already have money in it. Do 20, 30, 40 trades, paper trade, and then open up a futures account if you feel comfortable with it. But you don't need a big account, and you don't need $25,000 day trading margin for this. Now, I'm going to do a little class for you right now to solidify everything that I've been talking about. Okay. I hope you guys pay. Ninja's a great platform. Amp Futures is a great platform. I don't have any, I don't get paid by recommending they're just the 2 biggest ones. That's why they're pretty good. So I'm going to give you a little class right now. I hope you guys pay attention. This will kind of put together everything that I've been explaining to you for the last 45 minutes. Okay. And I really appreciate you all here. And it's so nice to see all these familiar faces here. It seems like I'm in my, I'm in my VIP room today. This is great. All right, let's do this, folks. All right, what you're about to see, thank you, Graham, I appreciate that. What you're about to see is, with the benefit of hindsight, we're not going to make any representations. We've been doing really good. It's been one of the biggest sellers in the pub's history, and it just keeps on giving. It's something I've been working on for a very long time and putting it together, and I'm very proud of this. And I wanted to come here and show it to Graham and Natester. Gramster and Nate. Folks, there will be losers. If you're expecting a black box mirror